Credit Suisse slashing another 1,500 jobs. China's manufacturing activity slows to the lowest level since February 2009. And Greek Prime Minister George Papandreou announces a referendum on Greece's next €130 billion bailout. U.S. futures kick off November with a big thud. I'm Alix Steele, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix Steele with The Street, and together we bring you the morning call. It's the first day of November, and it's not looking too good. We had a brutal end to October. We're looking at the spiders nearing that 38 retracement level that we were talking about. So I wanted to get, Scott, your line in the sand of what means we're looking at a healthy correction versus a deeper pullback that gets a little dangerous.
Well, there's two types of retracements, okay? The line in the sand is different from the speed changing. And over the course of the past 3 to 4 weeks, the speed has been intense. We have not pulled in more than the 25% retracement each time we paused. Shorts were trapped, longs were chasing, and now it seems like the gears are being switched a little bit. Today, we're opening below the 25% retracement, but above the 38.2% retracement. So it's going to be an interesting day for traders. And you mentioned today is not a great day to start November. It all depends who you're talking about. There are guys that are short out there. There are some that shorted into Friday's extension in the extra excitement of the European solution, which was just a plan. So they're actually happy and they're getting paid today. So it depends what side of the fence you're on. But as far as the bullish stance, let's go over some levels and I'll show you exactly where I think we need to hold in order to keep some type of bullish composure.
Let's look for it. Let's look at those levels.
There you go. Here's the S&P. Oh, look at that.
Look at that. Jinx.
All right, here you go. This was that low, and this was the huge rally. So yesterday what we wanted to do is show you the retracement rules from the low of about 1074 to 1293. It was really the first potent down day, and the first dot to put together was we opened below the 200-day, and we couldn't reclaim it. Then you closed on the low. Okay, what I want to say is this, Alex, is there are momentum traders out there that first down day, heavy or decent volume, closing the lows, the good book says to take it home short. So for momentum traders, they're getting paid today. So the title of their article is Nice Downside Follow Through. So it
all depends. All right, so then if you were short and you were heading into today, would you be covering your short now? And then what's the strategy for today after you cover?
I am short some spiders, and I will be covering into this down open. I wasn't expecting such a big down open, but if you act with a set of rules, you never have to expect anything. You just have to act responsible. So shorting yesterday on the close made sense. So I'm going to cover early so then I can look to buy those retracement rules to see if the rally remains intact, which I think it does, but it'll just be a little different. So back to that chart one more time. These are the levels to watch. Okay, the 25% retracement, 1239. We're opening below that. Okay, the 38.2, guys, write this down. Grab a pen. If you're watching this video, write this down. These are important. This is 1211. 1211 on the S&P. And then you also have a little spot at this 1220 to 1228. If you remember, everyone talked about 1220 to 1228 as the top of the resistance of this recent range, which we broke above. So opening below this will probably be resistance now if they try and rally us up at around 1240. If we can't get back above that, then we'll look at 1220 to 1228, and then that 1211 is huge. I do think the first time we get there, it's going to try and hold, so it could be a good trade, but then you have to see what type of balance and what type of participation you get.
I just want to point out two fundamental things I think that everyone should sort of keep on the back burner. First of all, of course, the manufacturing activity out of China is around that 50 level, not that great, lowest level since February 2009, but it could mean that China's rate tightening cycle is over, that they might not tighten anymore, which would be a positive, and perhaps they might even ease, although that might be farther off. Also, we saw the Royal Bank of Australia cutting rates by 0.25%, which is a big deal for them. And I heard on Bloomberg today that from an analyst at Barclays, that they never actually just do one easing. They do a series, and that could start to trickle into the rest of the stock market maybe in the longer term. So just something to keep on your back burner, I guess.
Well, that goes on the back burner, but on the front burner right now, you have MF, which I think is a bit of a problem, a little bit of a reality check that in their bankruptcy, they're going to see everything that they have. And they're going to have to find some kind of value there, or people are going to have to pay for some of these now disgruntled assets. And everyone has been marked differently on different balance sheets. So now we'll see what people are willing to pay for them, whether there's some of the...
Which could be dangerous, yeah.
Some of the toxic mortgages that could be written down for less than originally thought, or maybe some of the bonds, the one-year bonds from Spain and Italy. There's a lot in there that people are going to dissect. So we're going to see that news come out. Then obviously, Papandreou throwing that referendum out there raises the stakes for the G20 later
referendum
this
that
week.
won't even happen until January. So it's like 3 more months of uncertainty there. Okay, so then talking about banks, though, Scott, let's go to the XLF. It was one of the most hit yesterday. Those bank stocks really kind of got hammered off of that MFGlobal news. Avoid?
I wouldn't say avoid, but I would say they're not as strong. This was the first group to get beat up yesterday. It actually came close to closing at that 25% retracement. It always seems weaker. So right now I'm going to be looking at this level right here in XLF.
Not to miss the fact it was up 19% in October. Let's not forget that.
Well, that's why it pays to be a market timer. You know, from the low through the downtrend, here was a reverse. Look, it closed almost at the 25% retracement, showing you relative weakness. That's why a lot of people actually went out short the banks. Now I would say 12.95 is an area to watch. This will be a place to buy back if you want to be long some banks and you sold into strength. Now, quickly as a gauge, we talked about Goldman Sachs as being the barometer. You know, I always get a little upset when analysts come out and they upgrade scenarios after the fact. An influential analyst we spoke before came out last week and said, oh, buy Goldman Sachs now at 116. Where were they when it really technically made sense at 98.5 at 104? So 116 now, it's 107. These guys sometimes don't earn their paycheck. But anyway, take a look at Goldman Sachs. You know, this was what we talked about yesterday. We said if we're going to hold higher, it should hold a portion of the gap. It closed right at the gap. And now it's opening into it. So I would watch this 105.24 area. This would be a closing in the gap, would take some momentum out of it. So this is level one to look at. And then really the line in the sand for Goldman Sachs for me is 101.30. I get interested in trying to buy it right around this area. I'm not going to really be so excited around 105.
So maybe the two stronger sectors you have to watch have to be tech and retail. So really quickly, let's start with tech. Was up about 13% in October. And, you know, October through December is seasonally a really good, strong period for this sector.
Yeah, this sector has been great. It stalled in front of the old highs, rightly so, after a huge move. On a day like today, when you see a sea of red, you want to see if anything can go green. So to me, I think tech is that kind of candidate. So I'm going to look there first besides the banks. If you look at the Qs, here's that level. It did stall in front of the old highs. Big deal. Look at the move that it had. I would be watching the Qs as long as the Qs stay above 56.38. I think this is an area that to buy and also to keep the complexion in check. I'm going to watch tech today as a leader.
And what about retail? You know, only down about 1.3% yesterday, up about 9% for October. And you could argue that the winter weather over the weekend was good because it's going to push forward some sales for winter clothes, but perhaps also bad because a lot of stores probably lost power. People weren't able to get to the stores. Want to just tell you a couple stats for the holiday season I pulled today that's kind of interesting. First off, the National Retail Federation is expecting holiday sales to grow almost 3% this year. Not that great, but average person will spend approximately about $130 on average during the holiday season versus $112 from a year ago. So that, you know, $18 makes a difference for retailers.
Yeah, and I guess it's coming into the stocks because retail RTH has been holding higher. Look here at the RTH, you will see, again, stalled right here. Remember I showed you guys a small outside day, not like a crazy outside day, but something to take notice after a big move. It's now starting to wedge here. So I'd love to see it stay within this wedge. This would be my line in the sand. It starts to break below 107.84. You will see some momentum leave, and then you have to go to this moving average around 105.60. But let's see if it could stay in this wedge, because if it does, when we do turn up, if we turn up, this will be a leading group. You did see some green in the sector yesterday. Deckers went positive, Under Armour went positive, Lulu went positive. So a day that was like a gap and go to the downside, some buyers came in there. So let's see if they come back again from lower prices. So that's an area that I'm going to watch to see what, you know, some green lights.
To see if we can see those green lights. All right. And we'll be right back with materials and industrials and energy stocks. Lots of things to get going on right after this, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, let's get in the trenches here. We're going to go to energy and material stocks. Scott, I want to start with the OIHs up 30% in October. Is it too late, and then I guess maybe too early for November to kind of get involved again?
Well, at this point, you have to look at the levels, just like everything else. This was not a group acting well. It was not a group like the retail and Qs near breaking out. You had to really time it off the lows. So if you look here at the OIHs, you had a nice move off those lows. This was that bottom on October 4th, came up to this downtrend. It broke through. And now the excitement of this gap is fading. I do think you look at the OAHs around 122. That to me would be a decent area to look to buy back if you want to get in there. And then I think the line in the sand really comes into play more around this 116. But this is your zone to buy back if you want to get positioned for what could be an end of the year rally. This is your area, so you have some time to wait.
And I want to get into a few individual names. First is Baker Hughes reporting earnings. They earned about $1.18 a share, which was light. It was about 4 cents light. Revenue was in line at about $5.18 billion. It was hurt by lower margins overseas and, of course, oil price volatility. So that kind of negative headline doesn't bode well for the short term for Baker Hughes and the OIHs. Does Baker have any sort of good level you want to watch for support?
I'll take a look right now. I don't typically trade this one. I usually do like Schlumberger or Halliburton. There you go.
There you go.
I'm not exactly sure what it's down right now because we're in here, but I would say that this would be a decent level to watch just from the naked eye.
Right.
And then if that doesn't hold, there's bigger support right into here. So this would be your support area. Nice move off the lows, just like the group. Looks almost just like the OAHs. So here is a shallow, a little bit deeper, and this is your big time support.
So talk about Schlumberger. What are you doing? It's been almost 2 weeks since they actually reported, and I just want to point to some positives from their quarter, right? There was no change from demand for consumers, no impact to its business from issues in Europe. Tone is cautious, but the new CEO is definitely somewhat optimistic. I wonder if the good news isn't baked in at all and that it's not counting on any kind of a catalyst.
Well, this is something that's been trading a bit better. We talked about it last week. Let's look where it is right now. I haven't looked at it in a day or so. This was the last time we watched it. Okay, came off the low, nice little mid-level base, gapped up. Not quite in the gap like you just saw with Baker Hughes or even the OAH, so it's acting a bit stronger, so it's showing relative strength to the group. I would say if it fills this gap, you could be looking to buy this back in the 69 area. Not so bad, but I would think if this is any good, it doesn't break this prior base, which should be some decent support.
And then let's go to some material stocks here. I want to go to Freeport. So there's some good and some bad as I kind of see it, Scott. We have copper prices up over 6% in a week. Analysts at Merrill Lynch predict that copper prices can stay between the $3.40 range and the $3.80 range. We're kind of right there, smack in the middle. But of course, in terms of Freeport, it's dealing with ongoing strikes at its Grasberg mine that are supposed to go on until now mid-November. So kind of a good and a bad. Would you be playing this?
It's kind of like the stock. It was really bad for most of the year, and then it got good off the bottom, not showing relative strength, but a great timing mechanism. Let's take a quick look at the chart to see if there's any juice left. Looks pretty similar. This was the move off the lows, and as you can see, well off the highs. No relative strength here, just a bottom nice trade if you timed it. So at this point, it's already in the gap. I showed you some other stocks that weren't in the gap yet, so it's coming down a bit quicker. I would look at this moving average around 38.74, and then this prior base, which comes in right around 37. So I would say if you want to buy a dip in this FCX, this is the line in the sand that it should hold in order to keep some upside momentum. If it starts breaking below here, this gap will get filled. So this is your area. Thank goodness you didn't chase it up here if that's you.
And also I want to hit on Nucor really quickly as well. It got kind of beat up on Monday. It's definitely a steel play that's an auto play, and we're getting truck and auto sales for the U.S. for November today. This could be a mover, especially because we saw Chinese automakers come in with lower than expected revenue, and that really hurt the steel makers yesterday. Is there a trade?
I haven't looked at this one. I know guys were playing U.S. steel last week, and that had a sharp move. And as I go to this chart right now, you will see that this actually had a decent move off the lows. Decent move off the lows. Crossed this downtrend, had some movement back almost, if you take a look further back, to almost prior resistance where it turned tail. What I do see here, though, is just don't get worried about it, but a small ascending channel that if it starts to break below this area, it could see some downside action. You could see a test of 36 or perhaps even back to where the broken downtrend was. So it all depends on the market. Will we hold 25 or 38.2? Just like the same thesis there.
So energy stocks, material stocks, not terrible, but you got to wait for the right level then in order to get interested.
Yeah, you have to be that much more price specific.
All right, let's get to some quick ways to make some cash. We don't have a ton of time. We have a bunch of stocks to get to. First is REDF, sort of India's Google, if I can, up like 45% yesterday. I saw no headlines. Did I miss something, or was it just a really good trade?
All I heard is guys on the floor saying, what's going on with REDF? What's going on with REDF? Big move. Don't chase it, but it's in the game if they want to come after some of these speculative ones. This is unbelievable. Look at this chart here, guys. It crossed over this, what was it, 750 and gave you a huge move. So at this point, I would not chase. But if it could hold the top half of this to show it wasn't, or the top third, that it wasn't just a one-day wonder, maybe you buy right around 10. it could continue. So see if there's any commitment here. It shouldn't break below, I would say 980 actually.
What about Dunkin' Donuts? After the IPO kind of shook out, is it time for the retail investor to rethink the stock?
I think they definitely should. This was a great trade the day of. I looked at the chart yesterday. You're seeing accumulation over the course of 4 months. I like to see a 4 to 6 month base. It's hanging in there. People know that if you were one of the original guys in the first 6 months of Starbucks, you got rich or you got paid handsomely. If you look at Dunkin' Donuts right now, which I do love their iced coffee, and if I have to give them...
DNKN, you can do it.
I could do it. I had it before. It's showing a nice base. This is a nice base. Obviously, the shares out there aren't huge. It starts to get above 30. That's your entry. Maybe even the tier 1 in the base, and then on the breakout, go to tier 2, and then over the highs, and you have a winner for this year into next.
3 stocks, not a lot of time. Las Vegas stands. What are you doing?
I want to look to see if it can go green today. That will be on the front of my screen. It's down on the open. Maybe it goes from negative to positive.
What about Amazon talking about retail? Almost 47% of customers will buy online this year, the NRF says.
At this point, if you're long Amazon, you're in the penalty box, you probably have it from a lot lower. Had a nice trade into that gap, reversed yesterday. I would just trade it against that 200-day around 197.
And BIDU traded up into earnings, but then wasn't able to hold.
Yes, this one is tricky. You could buy on the pullbacks. We have to be in a better market for it to get some follow-through at this point, just for active traders.
And wrapping it up, Fed starts its 2-day meeting today. Is this going to be a game changer? Are traders really looking at this one?
They are now, because if we were at S&P 1300, which people thought we would be this week, then Big Ben wouldn't say much, wouldn't throw any biscuits at the market or any sugar. I did say yesterday, and
By sugar, he means quantitative easing, I'm sure.
Yes.
Okay.
And my quick note, I'm like, it would be disrespectful to run the market into the Fed, because then why would Uncle Ben come out and say we're going to be supportive, we're going to be accommodative, blah blah blah. But now down at 1230 or 1220 after a harsh pull-in with all the volatility again, he might be a little bit more supportive, and that could help the market on Wednesday, depending where we're at.
All right, look for that language for sure. Even if they don't announce anything, they might.
Treats and sugar. Look for him to say that.
Treats and sugar for Ben. All right, that's it for us for today. Happy trading, everybody. I'm Alix Steele from the street.
And I'm Scott. Make sure to tune in on the virtual trade floor, the chat. We can help you intraday or at the recap. Have a good one.